Welcome to the daily insights that matter. Now, in the recently announced union budget, the Honorable Finance Minister gave a positive push to the pharma sector as it proposed a program to promote research and innovation in pharmaceuticals through centers of excellence. Interestingly, according to government sources and industry experts, the center is also likely to roll out a research-linked incentive scheme to boost the pharma ecosystem. Let's understand the implications of this today. Now, the center is working actively on rolling out a research-linked incentive scheme for the pharma sector. This is based on the lines of the PLI or the production-linked incentive schemes. As you can see in the chart, the research spends on the top 5 firms averages to 6 to 11%. However, on the industry level, it is much smaller. The target is to increase the contribution to research and development to 15% of the firm's turnover, which currently hovers at around 4 to 5% at the industry level. Now, despite having a large pharmaceutical industry, investments in research and development has been limited in India, leading to a lower rate of innovation compared to the other developed countries. Now, imagine a world where India becomes a hub for groundbreaking pharmaceutical and life sciences research. That's what the new incentive scheme could make possible, propelling India to new heights in the global drugs market. Now, the challenge arriving with the research-linked incentive, like the PLI scheme, is the bulk of the funds have gone to the big corporates with a meager amount which is distributed to small firms. This needs to be addressed correctly. Now, the auto sector has shown some resilience in the past few months on the back of strong demand trends, easing supply chain constraints and the fall in crude oil prices. However, things took a turn in December 2022. Recently, the January 2023 monthly auto sales data was released by FADA, or the Federation of Automobile Dealers Association. Now, after a 5.4% year-on-year decline seen in December 2022, automobile sales rose by 13.56% year-on-year in the month of January 2023. However, the January 2023 auto sales numbers are still lower than the sales numbers seen in the pre-pandemic month of January 2020 by approximately 8%. Now, all the categories of vehicles did well, with the two-wheeler, three-wheeler, passenger vehicle, tractor and commercial vehicles growing by 10%, 59%, 22%, 8% and 16% respectively. While positive demand sentiments were seen across most of the segments, two-wheeler demand was weak in January 2023 as it fell by 7% when compared to the sales numbers in 2021 and by 13% when compared to the pre-pandemic sales numbers of Jan 2020. Now, according to the Federation, the rural market is yet to fully come to the party as the cost of ownership has shot up significantly while the disposable income has not increased in the same ratio. Easing supply side constraints, a pickup in demand and a fall in crude oil and metal prices resulting in lower input costs have all worked in the auto manufacturers' favor, and we believe that the auto sector outlook continues to remain positive. Having said that, we must look at some contingencies that could impact the performance of the auto sector collectively. As there are no special focus on the rural economy in the union budget for 2024, we don't see any immediate trigger for the rural growth as such. However, some positives that could help the rural income is the moderating inflation and the income tax rebates. So what does all of this news mean for you? The research and development spend of top pharma firms has been on the rise, but the research-linked incentive scheme is expected to target a 15% spend. With this, the Indian firms could compete neck to neck with the global peers and make India a global leader in API, or the active pharmaceutical ingredient, biotech products, medical devices and health technology. If the research-linked incentive is approved and rolled out, this will have an indirect positive impact on you. Retail auto sales, which is a key economic indicator, showed positive trends in January 2023. While the segment is slowly improving and is better than what it was a year ago, the rural market is lagging due to comparatively lower disposable income, and hence its revival will act as a catalyst to the collective auto sector. This will therefore have an indirect neutral impact on you for time being. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.